Hello everyone. Our lesson is about international pricing. We all know that pricing or price is very important for any businesses. Okay, pricing will set how much will our product be, how much it will be sold in the market. Will it be uh, Will it be viable because of the price, or will people buy it or not because it will be too costly for them? So let's talk about putting a price to our product in the international market. Okay? So effective pricing meets the needs of consumers and facilitates the exchange process. It requires that marketers understand that not all buyers want to pay the same price for products, just as they do not all want the same product, the same distribution outlets, or the same promotional messages. Therefore, in order to effectively price products, markets must distinguish among various market segments. The key to effective pricing is the same as the key to effective product distribution and promotion strategies. Marketers must understand buyers and price their products according to buyer needs if exchanges are to occur. However, one cannot overlook the fact that the price must be sufficient to support the plans of the organization, including satisfying stockholders. Price charge remains the primary source of revenue for most businesses. So again, we need to effectively price our products based on the needs, based on the profile, based on the buying power of the consumers. We have discussed previously about market segments. So in market segment, we identify or we narrow down the different kinds of market that we have. We can narrow it by geographical location, we can narrow it by age, we can narrow it by buying power, we can narrow it by uh, the economy of the country. So we need to properly price our products based on the classification or based on the segmentation that we have. Again, previously we have discussed about market segments. So here we are now starting to put marketing strategies to the segmentation process based on we put on our marketing strategies on the market segments that we did previously. Okay, so in addition, it is said here that in order to effectively price products, markets must distinguish among various market segments, because we know that different market segments will have different needs, will need different approaches, will have different buying powers. So we need to individualize or maybe customize our pricing based on the different locations, okay, based on the different segments. So before we go further about the international pricing, let's remember or let's remind ourselves first, what is the objectives of pricing? Para diin nga nag-price kita, okay? Firms rely on price to cover the cost of production, to pay expenses, and to provide the profit incentive necessary to continue to operate the business. We might think of these factors as helping organizations to survive, earn a profit, generate sales, secure an adequate share of the market, and gain an appropriate image. Okay? So again, price will determine how much profit we will have in every unit of products that we are selling. Okay? Because price will determine how much income, how much money will come to the organization or to the business. Because it will help the organization Like here listed 5 main purposes of how pricing or how price can help organization. So we will deal with that. We will deal with them one by one. Let's start with survival. It is apparent that most managers wish to pursue strategies that enable their organizations to continue in operation for the long term. So, survival is one major objective pursued by most executives. As if commercial firm, the price paid by the buyer generates the firm's revenue. If revenue falls below cost for a long period of time, the firm cannot survive. So basically here, we are talking that prices will determine revenues. Okay? So revenues will come from the price. So these revenues will help the firm to continue operating because if the firm is constantly losing money, the tendency is sooner or later the the business will file for bankruptcy and will close, di ba? Kung walang perang pumapasok sa isang negosyo at or padugi ang isa ka negosyo, it will not survive for a long period of time. That is why pricing is important because it will be a big determinant of how much income will it give or will it enter to the business, and those that income will help the business pay for their expenses, like for buying for another set of raw materials, salaries and wages, other operating costs. So that's how firm helps in the survival of the business. Another one is profit. So we discussed it a little bit kanina. So survival is closely linked to profitability. Making a 500 US dollars profit during the next year might be a pricing objective for a firm. Anything less will ensure failure. All business enterprises must earn a long-term profit. For many businesses, long-term profitability also allows the business to satisfy their most important the stockholders. Lower than expected or no profits will drive down stock prices and may prove disastrous for the company. So again, survival and profit will go hand in hand. Okay, let me just share what happened to the transportation sector during the pandemic. So again, although public transportation is now open during the pandemic time, still there is a limit on the passengers. So public transportation are only allowed 50%, di ba? 50%. So kung, for example, we will be talking about public utility vans, mga vans. So sa isang van, they could have a 11-seater or 14-seater. But because of the rule during the pandemic, usually ang makakasakay na lang sa van is 9. So kung dati, for example, from Marbel going to Surala or vice versa, kung dati na walang pandemic, mapupuno yung 14-seater or 12-seater na van, they are paying 30 pesos. 30 pesos yung pamasahe. Pero now that the pandemic, so since limited na lang yung number of passengers allowed per utility vehicle, they are already increasing the price almost 50% ang in-increase. So kung dati 30 pesos, ngayon when you ride for a public utility van going to Surala or going to Marbel, you are now paying 45 pesos because the customers are paying for the lost passenger. So that's how pricing is pricing will help to give continuous profit for the van para may profit yung driver ng van and continue sila sa pag-operate. Kasi kung 30 pesos pa rin pero lesser passengers, the tendency is malulugi yung mga van operators. So they won't survive during the pandemic. Another one is sales. Just as survival requires a long-term profit for a business enterprise, profit requires sales. As you will recall from earlier in the text, The task of marketing management relates to managing demand. Demand must be managed in order to regulate exchanges or sales. Thus, marketing management's aim is to alter sales patterns in some desirable way. So again, it is still interconnected because uh, you price a product para ibaligya. So that's sales. Kung mabaligya mo siya, may profit. Kung may profit, ma-survive ang negosyo. And then the market share. If the sales of Safeway supermarkets in the Dallas-Fort Worth metropolitan area of Texas, USA, account for 30% of all food sales in that area, we say that Safeway has a 30% market share. Management of all firms, large and small, are concerned with maintaining an adequate share of the market so that their sales volume will enable the firm to survive and prosper. Again, pricing strategy is one of the tools that is significant in creating and sustaining market share. Prices must be set to attract the appropriate market segment in significant numbers. So what is market share? So for example, there is a population of 100 people in the area. Let's say 100 people in the whole Surala. Let's say lang ha, in the whole Surala may 100 katao. Ang nagabakal sa imo nga product is trying, let's say 40 katao nagabakal sa product mo. The rest dito sa competitor mo. So you say that your market share is 40%. 40 people over the total, which is 100. So that's 40%. So yung market share mo is 40%. Now, pricing will help determine who is your target market. Okay? When we say a target market, we say that if your target market is the masses, which means the masses, di ba? Yung mga tao. So from very poor people until to the middle income earners. So yan yung target market mo. Yung mga rich, din mo target market. Now, the tendency is your price should be affordable to this type of target market. Or kung masyadong high-end ang product mo, so ang target market mo is yung mga rich people, so maybe your prices will not be affordable to those low-income market, pero yung mga target market is yung mga high income. So that's how pricing will determine who is your market and what is your market share, because maintaining the market share, your market share is very important. So that still, when you maintain your market share, that means you maintain that kind of sales, okay? Or you improve your market share so that you improve your sales, you improve the profit, and you will be continually survive in your business. Another one is image. Price policies plays an important role in affecting a firm's position of respect and esteem in its community. Price is a highly visible communicator. It must convey the message to the community that the firm offers good value, that it is fair in its dealings with the public, that it is a reliable place to patronize, and that it stands behind its products and services. So here it is now talking about the corporate image, the business image of the company. Now, why is it important to have a country-specific pricing strategy? Again, why is it important to have a country-specific pricing strategy? What do we mean by country-specific pricing strategy? Because each country is unique, di ba? Yun yung sabi natin sa market segmentation. Each country is unique. Each country has its own traditions, cultures, beliefs. Each country has a rich raw materials which is hard for one country. Each country has more purchasing power than the other country or the buying power. So now, why is it important that we specify our pricing strategy country to country? Okay? Bakit nawala? Wait lang, para nag-error. Hindi kasi mag-show yung screen. So again, it is important, like what I have said kanina, because it will just give parang customization to the country, to your target country. So for example, in US, they have more purchasing power, di ba? For example, I heard na yung isang toilet paper, isang karolyo sa toilet paper will cost them around more or less $2. So kung i-compute ta siya dere, that will be around more than 100 pesos sa isa lang karolyo. So kung sa aton siya, kung i-convert ta siya into our Philippine peso, ang balunta nga daw pwede ka mahal, di ba? Because 100 pesos yun. Pero sa doon, that is quite normal because they are also earning more, and of course they are earning doon per hour, per time on the basic basic pay, magkano yung monthly compensation, ganun. Doon sana mas may purchasing power sila in the US. So that's one reason why it is important to customize pricing strategy country to country. So international pricing is one of the most challenging pieces of international marketing. To be competitive in a new market, you must adjust your prices to the local market. And because each market is different, you will need a different pricing strategy for each new market you enter. These variables include the factors listed above, in example, taxes and currency, but also customer and cultural differences. Okay? So what are the different pricing approaches that we can use in pricing our products to different countries? Okay? We have the alternative approaches to determining prices. So this is just an introduction. Price determination decisions can be based on a number of factors, including cost, demand, competition, value, or some combination of factors. However, while many marketers are aware that they should consider these factors, pricing remains somewhat of an art. For purposes of discussion, we categorize the alternative approaches to determining prices are as follows. We have number one, cost-oriented pricing. We have cost plus and markups. So what do you mean by cost-oriented pricing? The cost plus method, sometimes called gross margin pricing, is perhaps most widely used by marketers to set price. The manager selects as a goal a particular gross margin that will produce a desirable profit level. Gross margin is the difference between how much the goods costs and the actual price for which it sells. This gross margin is designated by a percent of net sales. The percent selected varies among types of merchandise. That means that one product may have a goal of 48% gross margin, while another has a target of 33.5% or 2%. A primary reason that the cost-plus method is attractive to marketers is that they do not have to forecast general business conditions or customer demand. If sales volume projections are reasonably accurate, profits will be on target. Consumers may also view this method as fair since the price they pay is related to the cost of producing the item. Likewise, the marketer is sure that costs are covered. So what do you mean by cost-oriented pricing? Simple lang siya. Cost plus pila ang target income per unit. So for example, our product, ginbakal ta siya worth, ano lang siya, I am saying in the view of merchandising, meaning buy and sell. So for example, ang product, ginbakal ta siya tag 5. Gusto ta sang 20% markup or 20% income sa kada product. So 20% of 5 pesos is piso. So 5 pesos plus piso markup or income is equals to 6 pesos. So ganun na kasimple ang cost-oriented pricing. A lot of businesses, a lot of marketers are using this method. A lot. Almost, pag hambalon mo nga pricing, this is the most common. This is the most basic na pricing strategy. Di ba? Kaya nga man, kung pila ang presyo, dugangan mo lang siya sa ginansya mo, amo na ibaligyan mo sa market. So ganun yun siya. Ganun na kasimple. We have another one, the break-even analysis. A somewhat more sophisticated approach to cost-based pricing is the break-even analysis. The information required for the formula for break-even analysis is available from the accounting records in most firms. The break-even price is the price that will produce enough revenue to cover all costs at a given level of production. Total cost can be divided into fixed and variable, or total cost is equals to fixed cost plus variable cost. Recall that fixed cost does not change as the level of production goes up or down. The rent paid for the building to house the operation might be an example. No cost is fixed in the long run, but in the short run, many expenses cannot realistically be changed. Variable cost does change as production is increased or decreased. For example, the cost of raw material to make the product will vary with production. So what do we mean by break-even analysis? When you say break-even, kung sa Ilonggo pa, wala ka ginansya, wala ka lugi. Kung pila tong total cost mo, kung pila ang tanan mga gasto, amo po ng income. So for example, the whole expenses you incur is 1 million. Ang benta mo for that period is 1 million. So wala ka sang income, wala ka sang lugi. That's break even. Okay? Now, we need to determine what is fixed cost and what is variable cost. When we say fixed cost, amo ni siya ang mga expenses or amo ni siya ang mga classes of costs that will not change no matter pila ang imo nga gin-produce or pila ang imo nga ginbaligya nga products. So, for example, ang ginambalari is rent. Example lang, that you are, pwesto, di ba? Ang pwesto mo o tindahan mo, nagarenta ka lang worth 500, let's say 5,000 a month. May benta ka man o wala, mabayad ka sang 5,000 a month. Naka-income ka man sang, let's say, 50,000, 5,000 lang gyapon ang ibayad mo sa renta. So that's an example of fixed cost. When we say naman variable cost, these are the expenses or ito yung mga costs na the more products we set, the more products that we set or the more products that we manufacture, the higher the cost that we have. For example, raw materials, di ba? Mas damo ka sang products na nahimo, mas damo ka sang gasto for raw materials. So that's an example. And we have target rates of return. Break-even pricing is a reasonable approach when there is a limit on the quantity which a firm can provide, and particularly when the target return objective is set. Assume, for example, that a firm with the cost illustrated in the previous example determines it can provide no more than 10,000 units of the product in the next period of operation. Okay, so we will discuss this in a later video already, okay?